All right, welcome to the channel. I am SquireTrades. I'm 22 years old. I turned 23 in about 4 months. I just graduated college about halfway through May, so about 2.5 months ago. I've been trading for about 4 years, and I haven't really found any success until recently. Some of my journey is documented on the back end, journaling, all that type of stuff. But for the most part, I've always wanted to do this. I've always wanted to start a YouTube channel. I've always wanted to commit to a Road to Funded series or maybe just make some educational content. I haven't extracted the most money in the world by any means out of the stock market, but for the first time in my 4 year journey, just yesterday, I actually requested my first ever payout. So that was really cool. So today I decided, hey, I'm kind of a mediocre trader. I'm not the best. I haven't made much money. I've only given money to this game for 4 years now, and I'm only just starting to potentially see some benefits, see some upside, see some money come in instead of some money go out. And I hope to one day turn this trading and what I do with prop firms into a career. I hope to quit my job. I hope to do this full time. I hope to make many more YouTube videos and to just document the journey. So I guess kind of to get into what I do or what my strategy is and kind of how I trade. I start every day here on the 4 hour chart and I just look, where are we at in the market? Where are we? Do we have any OTEs? Are we at equilibrium of a price range? And so, just kind of straight off the bat here, you can see that we've just about today came in and tapped into this discount, right? And this is what I want to see going into tomorrow and then maybe even into the overnight session is I want to see us come. I want to see us reach up into this discount here. And then at this point, right, I'm anticipating that, maybe we'll build a little structure here overnight. We'll sweep these highs and then ideally just kind of fall. I want to keep seeing us fall. My friends and I, we have this running joke that I'm a perma bear, and you know what? I can live with that because, to be honest, I kind of am. Where our draw on liquidity is potentially is right here where we have left these relative equal lows. Technically, this swept, but I wouldn't call this a full sweep by any means. I guess we'll see how the next 3 days plays out, and we'll kind of be able to determine if that really was a sweep of liquidity or not. I personally don't think it is. I hope that we continue a lot lower, much lower. Um, just to kind of show you some of our external targets. I think you're looking here, 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 and we call this Justining this out. If you're unfamiliar with him, his name is Justin Werline on YouTube, on Instagram, everything else. This is his actual name if you want to look him up. Here's the tag. So shout out to Justin. I really look up to him. He's a great person to listen to for trading psychology, to hammer home ICT concepts that you might still not be familiar with, to really learn what an market maker sell model or market maker buy models are and all of that. So just a quick shout out to Justin. If you haven't checked him out before, go check him out, man. Anyways, we've got a lot of targets down here to the downside. We've got a lot of room to breathe. Technically, on the weekly, we have most certainly moved into bearish structure. Right here at this point, marked our weekly market structure shift fair value gap. Sorry, weekly market structure shift. So that's huge. We love to see that. You also down here, we're working on creating a weekly fair value gap just post breaking this market structure shift. So all things really to me at this point are pointing to bearish, but let's have a check and see at the daily chart. Oh, the daily chart is, this is just absolutely beautiful here to me. This is up here, up here you have your market structure shift, boom, right? You zoom in a little bit. You've got your break of structure fair value gap here that never actually ends up getting reached into. You have another break of structure, right? Hang on 2 seconds. You have another break of structure right here. You also have a fair value gap right here. You also have a little volume imbalance here, if you can see that. Here's your fair value gap. Boom, we respected that. Price sinks once again. And then it just you kind of just repeat the process again. You see, we put in a swing low, swing high, right? And then displace once again through this swing low here. You once again have another break of structure fair value gap that also overlaps with what is called a volume imbalance. If you're unfamiliar with what a volume imbalance is, it's basically when one candle's body to the next candle's body has a gap in between it. So there's your volume imbalance, right? You see most of the time, here's another volume imbalance, I guess, for an example, if you're unfamiliar with what a volume imbalance is, but there's just two examples. I guess kind of what a volume imbalance isn't. You can see the bottom of this candle overlaps with the top, right? The top of this overlaps, you see? So it's just kind of when the bodies of the candles overlap, right? And you can see here the bodies of these two candles don't overlap. So that's what we have as the volume imbalance. So what's crazy here actually is I would consider this a unicorn. If you're unfamiliar with what a unicorn is, you can see this is what they would call in ICT speak a breaker. You've got a swing low here. You've got a swing high here. You put in another swing low and come up here and sweep this high. You sweep this high, right? And then what do you do after we sweep that high? We immediately just displace. Boom, right here. That little displacement move right there is everything. Displace through there, create a fair value gap. This swing low here then becomes what you would call a breaker. Boom. And then this section overlapping is a very, very, very interesting area in which we would call a unicorn, where the breaker and the fair value gap both happen to line up with each other. So with all that being said, break of structure, daily fair value gap, we just reached up into that fair value gap today, and this is not a clean move. Today was actually a very poor day to trade. I'm hopeful for what the market has to bring to us the rest of the week. I'm thinking that maybe tomorrow we could come up here and we could sweep this high from today and then just immediately displace and get down here, maybe target this low, I think is what I would be looking for first at 17,374. But that would have to be a hefty drop in one day, and at this moment I'm unsure what the news cycle looks like going into the rest of the week. So I'll have to take a look at that. I'm not going to do that right now, but anyways, I'm looking bearish for the rest of the week. But I guess a little bit about my strategy is I go onto the 4-hour chart and I look for internal to external. If you're unfamiliar with what internal is, very briefly I'll explain it as this. Internal liquidity is like a fair value gap. That's what we would consider internal. External liquidity are old highs or old lows. So this old high here we would consider an external, right? This old low, external. You can define externals as basically swing highs and swing lows, okay? And the ones that really matter are the ones that haven't been taken out yet. You can use those as targets. Targets for what, you may ask? Price targets, places where you can go and trim your position, right? So what I see here is very obvious bullish movement. You have this huge leg down that we created. We've almost come up and swept equilibrium. Maybe ES did. In fact, if ES swept that liquidity, then we no longer have any reason to go in and sweep this discount level, as I'm sure ES maybe already has. Moving forward, I would say tomorrow's first target is this level here, if we don't go through and sweep it overnight, but I'm sure we will. But back to what I was saying about internal and external. The market moves from internal to external, period. It always does, no matter what, and it always will, right? So you can see here, the market just swept this external right here. And now the market needs to go back and find some internal, right? So internal could be considered this little volume imbalance here, a breaker down here, an accumulation block, right? And internal can be a lot of things, but I more so prefer for internals to be fair value gaps. So I use the 4-hour internal to external to decide what my bias is. So I guess let me just go find an example that I can use in recent history. And yes, I am going to cherry pick an example just because I can. If you don't like it, cry about it, I guess. I don't really care. Let's see here. What's a decent example? Here. This will be a fine example, I guess. Come back to 6 a.m. on this given day. So, we're here, right? This is where we're at. This is where you have your internal, or your external, sorry. So we've swept external here. We've also swept external here. So now I'm looking for us to retrace back into internal. Once we retrace back into internal here, which would be this fair value gap, then I'm on the 15-minute chart and I'm looking long. So really quickly, I'll skip ahead. Boom, we've reached into that fair value gap. Now officially at this point, I'm dropping down to my 15-minute chart. What happened here? Oh, here we are. So at this point, I'm dropping onto my 15-minute chart and I'm looking, right, for a market structure shift fair value gap to the long side. As you can see here, this price action isn't very clean, but you get the idea between what I'm trying to say about the 15-minute. You drop down to the 15-minute, you watch for a market structure shift fair value gap. So in this case, right, this is kind of something that we've done here on the 15-minute. And then I want to see us displace, retrace, and then move, right? So this here would be your market structure shift. Boom. Then you've got a fair value gap here. And once we come down into here on the 15-minute, now I'm dropping down to the 1 minute and I'm looking for an execution model, which is basically just a market structure shift fair value gap on the 1 minute as well.